And 5, 4. Everyone, we are back with my guest, Matt Davio, who you guys may or may not have heard. I did a little tweeting about this before, but I was on his podcast maybe a couple months back, the 1 Minute Trader podcast. Am I right? You can follow his Twitter handle at @MissTrade. Yes,
that's correct. And you can find us at 1 Minute Trader, or my personal is at MissTrade. And yes, the 1 Minute Trader podcast. You can find us on all the usual channels, iTunes, Stitcher, etc.
I, for one, loved being on the show, and it definitely inspired me in a lot of ways. So, Matt, before we get too much into the sort of meat of the interview, I want to talk first a little bit about sort of just getting to know you. So you've been a trader for going on almost 30 years now. And I think poker and trading, a lot of players, we have Andy Frankenberger, we have Anthony Zeno, like a lot of traders become poker players. And I think a lot of poker players are experimenting in this trading world as a whole. But for me, it's been really new. It's been something I've been exploring in the last 6 months. And the way that you explained it to me made me sort of fall in love with the idea of trading. So talk to our viewers a little bit about, how you found yourself in this space and yeah, how
yeah,
there.
That's a fair question. I think really from I definitely had a bent towards arbitrage, for lack of better words. I didn't know what that word meant when I was a kid, but I collected baseball cards, I collected beer cans, I had a very small stamp collection, and probably had something to do with non-diagnosed ADD, which I did have diagnosed as an adult just a couple of years ago. So I think having like a lot of positive diversions for me as a kid, and I was also into keeping statistics for this board baseball game that I would play called Stratomatic, and you can still play the game. It's got all these, there's fanatics about the game, and it hasn't gone to computer. It's a dice game. There's there's a batter's card and a pitcher's card, and there's an indicator die. And so I was into it. I was a baseball player. I was just always into the numbers side of things, and kind of, oh, this guy will steal a base and he's successful 6 out of 10 or 7 out of 10, something like that. And that was at a time when kind of pinch runners were just coming into baseball. So all these things were kind of like changing in a lot of different games. And obviously this was well before the internet, when I was growing up in the late 70s, early 80s as a teenager. And and then my dad, I had a paper route, and my dad, I wanted to buy a moped. That was like my goal in life. And I never bought the moped because my dad was, he was a product of, or I would say a byproduct of the Depression. He was a kid born after it, but his parents were always in that mentality, and he was the oldest. He was the responsible one. So my dad was always, save your money, save your money. And so, from day one, my paper route, by the time I had it 10 until I was 16. And by the time I was 18 and took over that account, and I wasn't, it was maybe 60, 70 customers that I was delivering daily papers to. Maybe at the end of the day, I was clearing a couple $1,000. It wasn't, but for a kid, 10, 11, and 12, that's a lot of money when you don't have any expenses. So my dad really drove home, save your money, save your money, save your money, wants and needs, all these things. And, by the time I got to college at 17, I was a freshman, and I think I had like $23,000. So compounding, saving my money. And honest to God, I swear, I bet you that was gone in a year and a half when it was turned over to me at 18.
Well, because I was going to say the whole concept of trading, right, is not the concept of like save your money, save your money. It's like you got to gamble a little bit. Am I right?
See, I disagree. Gambles. You're in Vegas, and there's definitely. We talked about this on your show. There's probably a reason why I don't like poker, is because it feels like a gamble. I like things that I feel that there are statistical edges. So as I mentioned to you, hey, Claudell Washington was hired by the Oakland A's just to be a pinch runner. And people are like, what? Well, but then when you started looking at, if you could get a guy in first, pinch run him to second, third, maybe, I mean, runs are going to get scored on a ground ball or a medium to deep fly ball. So statistically, it made a lot of sense. And that was the type of thing where edge comes into play.
Well, see, I just read the Michael Lewis book, who he, of course, wrote Moneyball, but the most recent one, The Undoing Project. And it's interesting because they do talk a lot about sports and sort of.
I'm sorry, you broke up a little bit there.
Oh, it says my internet connection is unstable. Is it back?
It's back. Now it says unstable on my end.
So we just got a new Wi-Fi router too. Like I will be owed if it's broken.
Yeah, mine was okay. Mine was pretty good today. Anyways, it was which Michael Lewis book?
So I just read The Undoing Project, which the whole first chapter is about the sort of mistakes that people were making after moving to this like just statistical model, how they went from this totally like choosing, having these guys who are these, scouts, and they have these gut instincts about players and how they realized how wrong that was. And then they went way too far to the other side and like only statistical, and how you really have to learn to balance both of these. And I think in poker and in trading, because there are tons of statistical edges also obviously in poker.
Of course, for many people there is, and I don't feel like I have one because such a big component of it, Sarah, is a gamble, which is bluffing. Like I can't bluff the market, I can't bluff the price. It is where it is at any time. Now that we'll get into this, I'm sure, a little bit later in the conversation, but I would say in many ways, what's going on in the alt currency world is, from our perspective as like traders who do this professionally, I would love to trade this stuff, but where? Like, where do I find an exchange that has the top 100 alt currencies? It doesn't exist. So then you go, well, that sounds fraudulent. It's just fraught with risk galore, because who owns the exchange? How am I going to get paid? All these things, which I can rely upon in, at least today, in the U.S. markets. Right.
Okay. So, yeah, we're definitely getting way more into that, because I do see these as some really important things. And even people that I know that have made some major fiscal errors this year because of some of these things that they didn't realize. I think about the crypto market. But before we get there, first, what did you go to college for? And then how did you find yourself in the trading room?
I studied economics like everybody. I thought I'd be pre-med, pre-orthodont, maybe an orthodontist, because I remember, when I had braces, I thought that was a pretty cool job, and it probably appealed to my sense. But once I started taking I think I took maybe, half a year of chemistry, and I was out, because I was like, too hard for me. I'm not that smart, or at least I wasn't that interested in it. And if you're not going to be interested in it, you got basically 4 more classes like that. You're going to take chemistry for a couple of years. So that was the weed out for me. At Michigan in Ann Arbor, so there is an undergraduate business school, which they only admit 300, and you apply after or during your sophomore year. I didn't even apply. I would not have gotten in. So then you're left in the liberal arts college, which I was in. Really the only thing that's kind of business-y is what most of us study, economics. So I studied the dismal science, economics, and I got a double major in history, which I actually enjoy. And there is a lot of carryover, as you talked about, edge with history, statistics, both statistically and, more importantly, behaviorally.
So this is where I think, and this is what I really thought was important for the listeners. As a trader, I think there's so much crossover, especially in this new crypto space. But it is interesting because you hear a lot of people right now making a lot of comparisons to, tulip mania and some of these economic phenomena that we've seen before in our histories, the Beanie Baby things. And, from someone with a trader background, seeing what's been happening the last couple of years in this crypto space, do you think that those are fair analogies?
Yes and no. I think so. I always say, when people use Beanie Babies or pet rocks, I go, well, did you ever use those things to buy something with? No, I didn't. So to me, those are more like fads. They're not, they weren't currency. So this is really a situation where we've definitely come, we've had new currencies come and go in our life, whether it's Venezuela, Argentina, wiped out a couple times in our lifetime. There's many things like that where currencies are basically made up with the good faith and backing of whoever says it is. There's really, to me, there's not a lot of difference in that versus, say, a crypto. And so I think it's unfair in that regard to call it, it's not a fad. It is a currency. What is it backed by, I think, is probably, to me, Sarah, and I'm by no means, I don't think anybody knows this stuff 100%. But is it backed by something? Yes. Is it backed by a government? Not today. It probably will need to be, or, I've read Russia and Venezuela, or, Venezuela is already tying their oil holdings to their own crypto so that they can, because they have this oil that they're basically being boxed into economically by policy, whether it's the United States or other people saying, I'm not going to buy oil from you. Well, they're saying, you know what? That's fine. We have a way to give you money, and that's our crypto, or take your money, and that's our crypto. So it's interesting because there's a lot of things going on at the same time. And then you have countries like Israel saying, we're not going to back it, but they're going to change their minds. And ultimately, tell me a currency in the history of mankind that has ever lasted. There isn't one.
Right. And it's interesting because we used to have the gold-backed dollar, which I think has more or less become what is the oil-based dollar.
Yeah. There's a lot of truth between Bretton Woods, which was a policy, that Nixon put into place that basically got rid of the gold-backed dollar and made it the petrodollar. And it was the euro petrodollar. And even now today, the euro was made up by these governments to create a bigger government of all these conglomerate governments, which makes zero sense when you think about it, because they're politically like Russia or not Russia, but let's say Western Europe, west of Russia, that makes up the euro, whether it's the pound, the Swiss franc, the German mark, et cetera. All these things used to be their own currencies. They were all failing. So is this anything, and I happen to believe macro-wise that the euro probably will fail, as will the United States dollar at some point.
Yep.
So there will be, it's a long-winded answer to your question, which is it's complicated.
Yeah. Well, and I think it's interesting to look too when we see sort of what the banking system has done to currency as a whole, even what we're talking about in terms of what's real, even the US dollar at this point is more or less digital, right? None of us, you can't go into a bank and be like, can I please have my $30,000? Most of the time they're just going to say, I'll give you a check, or basically everything is
correct.
Sort of a digital version of its actual self.
Well, it's funny you said that, because I read something within the last month since we last spoke, and it was to that point, and I was like, that can't be true. But then I thought about it, and I'm like, it's absolutely true. To your point, a check is a digital currency, as is a ATM, as is a ACH, as is any wire transfer. Today, the stat I read was 99.3% of all transactions in the United States are already done digitally. Could be a debit card, right? It could be a welfare debit card.
Mm-hmm.
All these things are digital forms of money. There's, most people, they're not getting, they don't even have a bank account, so they're using that card to prevent them from buying stuff maybe that is disallowed on the welfare. There's all these things going on.
Well, and even when you do international travel, it's your credit card is more or less the only.
Right.
I mean, you can exchange your money, you can go, but you're always going to lose a little bit. The easiest way to travel in this, multicultural world is to just use your digital currency.
Well, and when I was, the first time I went to Europe, and
traveler's checks.
Right. Traveler's checks. Who? And I saw a couple the other day, and they were like, get the traveler's check. I'm like, I can't believe people still use them.
It's so
but there's, yeah. But I did. I remember I got $400 from American Express that my dad said, go get these traveler's checks, because it did protect you, right? If they got stolen or lost, there was some protection, which, as you said, Sarah, with credit cards and debit cards, you don't need that anymore. And it's actually the best way, because you're not getting killed on the conversion, at the airport for your currency like you would today.
100%. I tell everyone when they travel, I'm like, just either go to the ATM or use your credit card. Like, do not do this, like get your money out and exchange it. But it's funny because even in the course of my lifetime, which is, you know, relatively short, looking at history, you know, I've seen some of these transitions and how fast they happen. And I think this explosion in crypto really is happening super fast. And I think a lot of people aren't 100% prepared, and it is very easy to make a lot of mistakes. And so one of the things I really did want to talk to you about, first of all, is just, you have all this experience in trading and, you know, making sure that you're making these smart economic decisions and doing things that have a statistical edge. When the CBOE and the CME, I want to say CME, did the crypto, the big Bitcoin
CME, Chicago Mercantile, and the Chicago Board of Exchange.
Yeah. So this whole thing, everyone had all this speculation about what was going to happen and what that meant. And so from someone who actually knows, can you tell us what was that? What was going down there?
Well, so the crypto in the past was traded on a number of exchanges, none of which really had any backing or security, in the sense that, not that any, exchanges have failed, by the way, in the United States. So let me just say that. But the one thing that you have is kind of a overseer of the law, whether it's the SEC for the stock markets. The futures exchange has the futures of the FTC. They have their own trade commission that is in there to make sure that there isn't these illicit or advantageous types of programs, which right now the alt currency is totally the Wild West. If you picked the 100 most capitalized cryptos and said, can I trade 70 of them somewhere? I would say to you, not that I've seen. So at least, whereas we can go to many brokers today and pretty much trade anything anywhere in the world, whether it's Singapore, Taiwan, Hong Kong, Australia, New Zealand, right? All these places have markets, and you could sign some paperwork and understand the risks, and then go ahead and trade the DAX in Germany, or the CAC in France, or in France, or the FTSE, and you can trade all these. Like, you and I can go, and on the same platform that I use today, I can trade on those exchanges. I really can't do that. There's no and the point of crypto is there is no centralized exchange.
Right.
There is no overseer. The overseer, as I understand it, Sarah, and again, I'm going to dumb this down as best I can, but basically, a cryptocurrency is a math problem.
Yeah. And
the math problem has different layers of security that are released and mined by solving pieces of the math problem as you go on.
Yep.
And at some point, there's a limited number of digits, or ones and zeros, that can be pruned or mined from doing this math problem. Now, where you have the risk, in my mind, is where do you trade it? Where do you complain when you have a complaint? Who do you talk to? How do you get your money out? How do you put your money in? How do you convert it from one crypto to another if only 10 of them, of those 100 most liquid, are on this exchange? And that's the most you can do. I mean, Coinbase is really the one that people know of, and there's only 4 things you can trade on it.
Well, and Coinbase is Coinbase is 2%, I think, right now, of the Bitcoin. We in America, we're like Coinbase for whatever, reason.
Right.
But
well, it's just because it's U.S. based. I think that's the only reason. But there's all these other ones that are in China or Hong Kong or South Korea, and who knows where they are? That's the thing.
Right.
So that's the scary part. And I would say that to people, there's a lot of humor and we can joke about it, but, that's the thing that's still not there. And that is scary for people, is that, first of all, prices fluctuate, and that's a risk, but now we're talking more along the lines of exchange risk. How do we do business, right? That's the very basics. How do we buy and sell, put our money in there? I can't tell you. And that's, that's one thing that I know you and I have talked about it, but digging into that has been pretty interesting. And there's people talking about it, but even those that are talking about it can't answer that. I asked a guy today who's been mining for a year and a half. He's like, I'm like, and he's a smart guy. He went to Purdue. He studied, IOE, industrial electrical engineering. He knows what he's doing, like with computers. he's got a couple startups. He's been a trader, so he's got all this great experience. And I said, just break it down for me. And he still can't. He doesn't. He's like, listen, I don't know. I've had some good mentors that have kind of taught me the way how to mine. And he got in maybe early enough, year and a half, 2 years ago, that it's silly money now. Maybe he started with 15, 20 grand, and maybe it's worth a couple, $500,000. Yeah, I'm just saying, now but it's different now that, more people are in the, or think they're in the know. That's where you start getting into these like really, really gray areas, and how do I get my money out when the market's fast? We've seen it a number of times. The Bitcoin itself has crashed as soon as the CBOE and CME. Basically, you asked me, what has happened? Well, yeah, we can trade it now in the US, and most of your futures brokers now can offer this, but it's not very liquid. There still isn't any even micro percentage of what's happening in that space. So you can't really, nobody really big can be in there. Can you trade a couple contracts? Sure. Can you trade 5? Maybe 10? It gets pretty thin up there. So that still becomes the problem. Is like, where is a place where we can go and transact, whether I live in Hong Kong or in Turkey or in Australia, right? So
one of the things you mentioned, though, very early on in the interview was this idea of arbitrage, and that's something that you were initially attracted to. So even though maybe it's a little sketchy and we're not 100% sure, what exchanges are, they're not regulated essentially. So yes, it's definitely a gamble, but doesn't it also then present a lot of opportunity for arbitrage?
It does, but then the individual has.
Wait, like it just went in and out.
Can you hear me?
Yeah. Okay. You're back.
Okay. You really have to establish how much risk you're taking by trading on an exchange. And as I said, moving money from one exchange to another is it's complicated to begin with, right? Even if you're trading a NASDAQ and a New York Stock Exchange, there's a lot of things that go on in the background that people take for granted today, because it's, we've been doing it, I guess. I mean, I was in that transition where I always traded on a screen in the 90s, but I was on the phone putting my order in with my broker. Then we transitioned to more and more online, where today, honestly, I would have to look up the number online to who to call if my order entry system went down. It's that robust today, and I don't even think about it, but I should still have a contingent if I need to call somebody. Who do I call? So, and I half jokingly say that because I do have it, but these are the types of things that happen in fast markets, right? When prices are moving fast, you need to know that you're going to execute. I can tell you, I've played around with Coinbase at the same time when I was trading it on, the U.S. exchanges, and selling it there in the late, right between the 15th when it, came out on the 8th. Then the 8th and the 15th, those were the staggered on the CBOE, then the CME. And we basically peaked. We saw the top of the crypto markets, at least Bitcoin itself, the only one that's trading right now, peaked basically at 20,000 day one. And we've been trending down. We went as low as 10 something, 10.4. Mm-hmm. And now we're sitting somewhere around 14 again. And every time we've bounced, we've just gone lower and lower. And I think that's exactly what most traders would have expected. That is exactly how, look at Snapchat. It goes public and price goes down because it was not really that impressive, so it was not oversubscribed, and people still don't understand how they're going to make money, when they will make money. Not that Facebook and all these other things didn't go through similar things, but it's pretty typical that an IPO that is hyped like that kind of fizzles. And I'd kind of consider, what happened with crypto to be in that same vein. Like, traders could have told you this was, going to run it up, then they're going to take it back down.
So I heard a lot of discussion when it first came out on the CBOE that basically the way that they had structured, so I don't know everything about futures, and a lot about futures, but that the way that they had structured the buying of it was sort of outdated, that they had done it based on a time when Bitcoin was like $3,000 or something, and made it just really difficult for people to buy. Also because I think it is very volatile. But can you explain a little bit about what one needs to do to actually trade Bitcoin on the futures market? It's like really expensive, right?
No, it's not. I mean, it depends on where you trade, but like for me, it's no different trading a CME Bitcoin contract than it is the S&P. And I happen to be, a professional. I've got the professional rate. I actually, through my firm, I basically have an exchange seat. So my transaction costs are very minimum anyways to begin with. So I'm not but the retail person, even, a regular retail person is only going to pay, let's say, list price might be $5 for one contract. So it's not expensive. $15,000 item that you're controlling, you can buy or sell it at the market. That's the $5 is nothing, right? It doesn't even show up. Yeah. Whereas if you were to buy $16,000 of Bitcoin on Coinbase, it would probably run you close to 2 or 3%. So the onerous percentages to trade on Coinbase, which is the legitimate one that we've mentioned, and again, we have no stake in these companies. These are where a lot of people transact. They charge significant. It's like brokerages in the old days when you used to buy stock. It was very expensive, and that all changed in this so that's why I bring up that period. The early 90s until 2000, there was times my phone broker would charge me, $150 to sell 2,000 shares of some tech bubble stock in 98, 99. So rules changed there too. I mean, it's, right. And competition comes in, makes it better. Hopefully someday we'll have an exchange that will be able to handle, and be reputable and backed by something. But right now, a lot of the exchanges, like our own, like the Gemini exchange is owned by the Winklevoss twins. I mean, how is that not a conflict, right? They're coming public with these initial coin offerings, these ICOs, they own the exchange. So when they crash, they get paid either way because there's transactions happening. So there's major conflict that would never be allowed. You couldn't do that on the CBOE. You couldn't do that in the CME. When I traded for hedge funds, I couldn't take, if you were my broker, I couldn't take the IPO that you were offering me. It was just in the bylaws of how we had to behave as traders.
Right. It's unethical. Okay?
It's unethical because it's easy money. So and I'm not saying some didn't do that, but right. our firm, we couldn't do it. Right. We just couldn't do it. It was, we had to report any personal trades. It was by the book.
Have you though, outside of the futures, have you experimented with trading? So you said, for example, for a trader, it was pretty obvious what was going to happen with Bitcoin once it went into the futures, which I don't know exactly how one would know that. I'm assuming you have, graphs and trends and all these type of things, but are you able to use some of those same future telling ideas to just buy into cryptos?
Sure. I mean, right now, again, if you had a place to, what I would do and the way I would research it is there's some websites out there and we can point to them later, but there's some websites that will give you kind of the market cap of the top 100.
Right.
And from Bitcoin down, right? There's Bitcoin's worth, what is it today? How many billions, hundreds of billions?
15, whatever. Yes.
No, it's like 200 billion for Bitcoin. And then there's some that are, all the way from anywhere from, I think the top 70 are 1 billion or bigger. So think about that.
Right.
That's,
I read Bitcoin was only 33% of the market share right now, which I was like, what is happening?
Yeah, it's not, I don't even think it's that big. I think it's shrunk even more.
Wow.
So you have all these things that it's like the Wild West. People come in and they chase these things all over because somebody, and there's definitely touters out there. This is what people need to be aware of because there's nobody policing this stuff. At least, even in the U.S. markets, you have pink sheets, you have penny stocks. This happens all the time. People slap on we're an AR company now. We're a VR company. We're a virtual reality company. We're AI. We're artificial intelligence. We're a marijuana company today. Even though we used to be a pharmaceutical, Now we're going to call ourselves, Mara Pharmaceutical, whatever, those types of things and games happen all the time, and buyer beware, because it's just, it's somebody trying to sell their stock to you. And there's probably many times nothing behind it. Now, this is where it gets, how do any of us know the math problem? How do any of us know that any of this is real? We don't. So just that alone is like, whoa, start thinking about it. It's like, you shouldn't be buying crypto with your credit card.
Right.
And that's, that's what people are doing.
It's the same with poker, I think also.
Yep.
It's like, you can bet what you can't lose. And I think, of course, it's super important for people to do that in anything. Like, let's not go, let's not go totally mad. But I think what's super interesting, I heard, I was listening to some traders talk the other day who are like not particularly into the crypto space. In fact, they sold their like bit as soon as they could when it went up, which is smart. And I understand that's what, good traders do. But, they were talking a little bit about how, they don't even know what they're trading half of the time. They're just basing things on numbers, what it looks like, what the, charts look like, or, whatever. This is a spot where I see an edge where I can make some money. And so do you think that also translates then into this crypto space where maybe some of these cryptos are garbage, but if you understand how to make money on garbage?
Totally. And again, if I had an exchange where I can go in there and arb, a basket of them, which reduces some risk, right? If I could do that and say, okay, if these 3 out of 4 go up, I'm going to make money, even though the one went down. I would be happy to, you could do things like that and be creative. And believe me, there's a lot of traders that trade on charts. There's a lot of traders that trade on fundamentals, right? There's really those 2 types of traders, and most people fall into one of those. Yeah. And then there is what I consider myself, which is a behavioral trader, which is, I'm the janitor who cleans up the mess at the top, and which is the explosion.
The 20,000.
Right, exactly. I'm that janitor, and I'm the janitor who cleans up the puke.
The 10-1. The 10,100.
That's correct. So that's behavioral, right? I know at both points we're exhausting kind of a move, and this is what traders do. We're looking for different time frames, different products have moves. Like, for example, right now, if you looked at the S&P 500 or the NASDAQ, we just finished the 6th trading day of the year. We've been up higher high every single day for the last 6 days. Very unusual, but not out of this world. This too will sell off. It may have started at the close today. Matter of fact, the NASDAQ from where it opened actually closed below where it opened, and the S&P also did by 1 point now. So we opened at a price, we traded higher, and then we closed lower than we opened, which is a warning sign, nothing but that. But it tends to show that, hey, we spent a block of time, 6 hours today, trading at higher prices and then closed below it. That's generally not a positive sentiment. And there could be news tomorrow that takes it back to a new high, right? But I'm betting that maybe we have seen the last 6 days may have put in a high, kind of that euphoric move, if we don't see another new high tomorrow. But time will tell.
Okay, so I want to talk then. Obviously there's a lot of things that I would love to just pick your brain about everything, which just, hint, hint, wink, wink, you guys, we might have something coming up at some point on these type of things. But I wanted to get from you, just because there is so many people in our audience at this point that are starting to jump into the crypto space, to talk a little bit about just what you see, and even for your own self, things that you might have done. What are some of these common mistakes that people in trading make when they first start out, that maybe those are the people you're cleaning up after? Some of these spots?
They are. So first, know that you can't, unless you're Warren Buffett, and even Warren Buffett has limitations, you can't be involved in everything in this business of arbitrage or trading or speculating, right? Pick one thing that you know something about, if it's Bitcoin or Litecoin or Dash or Monero or Komodo or Litecoin. If you think you know something about that, and again, legal, what is legal or illegal? Like in our business, I can tell you what that is. I can't tell you if there's no law. So you already have all this mushy layer of risk out there, but I would focus on one. understanding that one, you like the name of it. I don't care, right?
Yeah.
The next thing is how you come about getting that one. To me, I would look at things like that are important to me when I trade: liquidity, meaning there's buyers and sellers, a lot of them, and transparency, meaning I know where the price is, right? Without those two things, and how long has it been trading? How does it trade? Does it have a history? So for me, again, that liquidity comes usually with time. Otherwise, you have an illiquid product that is difficult to buy and or sell, which is kind of where we are in the crypto macro sense, right? There are times when people come rushing in to sell and there's no buyers. That's not a liquid market. That's scary. That's why it goes from 8,000 to 20, 20 back to 10, right. 10 to 6, 16 to 12, 12 or 16 to 13, 17 to 11. I mean, I'm basically like, if you looked at a chart and you've seen some of the memes out there, this is how that world is right now. How do you sleep at night with that type of volatility? It's the same thing I tell people with stocks. You trade stocks that you can handle the volatility with your bankroll, with your money, just like playing poker. You want to sit down at the tables, kind of where the players and something about them and how they play. It may be slower, but you feel I can still make money against Matt. He's the shill at the table. That's probably likely.
So this is something I think that really does translate over to, almost anything, but it's interesting because I've seen some people that I know recently closely that are not gamblers by nature by any means and have gotten into trading some alts and some getting into crypto and who are very clearly emotionally incapable of dealing with some of the highs and lows of this. Yeah. And I'm sure it's been a long time since you've had a huge.
So tell me.
Yes.
Tell me what some of those emotions are that you see that these people struggle with. I'd like to hear it from your end, how you view that.
I perceive it to be like just terror. I feel like, and also just tons. I think a lot of people aren't ready for the anxiety, I guess, the emotional roller coaster that can come with, for me, it's like I bought in with like what I'm sure traders would call the, investor strategy, right? Like I'm not really super worried right now about where it's going every day because I don't have time for that at the moment. But a lot of people I know who have bought in and are looking every single day and up and down and back and forth, I see them as really, really stressed out. And I don't really know.
Are they stressed? Are they stressed when they're making money, or are they stressed when they're losing money?
Excited when they're making money, and they're super depressed when they're losing it. And I just figure like you have to probably have some tips to help people, balance out this roller coaster who are new to make losing and making.
Well, this is where I think even imagining what it would feel like is nothing like actually doing it. So a lot of people say, oh, if I had $1 million, I'd do that. Well, would you? Or would you become like really stingy and afraid, right? There's mm-hmm. fear both ways. There's fear of losing and there's fear of missing out. And they're both the same thing. They're different emotions, but they're at the end of the day, they're really the same thing. So I think it's really important that people understand what they're doing before they, before you buy 1,000 shares of Apple. Like it's funny, before we came on, I was having lunch with my oldest son, who is 18. He's finished his first year in college, and he's always texting me, Dad, buy me a Bitcoin. I'm like, do you have $17,000? He's like, what do you mean? I'm like, well, if you want me to buy it right now, that's what it will cost. And he's like, well, lend it to me. I go, no. And so with any type of speculation or trading, then my next question to him, and then I asked him this today because he was talking, I want to buy McDonald's. I said, well, let me show you the chart. McDonald's in the last year has gone from $113 a share to $180 is about where it is. Wow. He said, so if I bought 100 shares, what would that have cost me? I said, well, 100 shares at 113 would have cost you around 12 grand. He's like, oh, okay. And what would I have made if I held it all year? And it happens to be one of those charts that, looks pretty much like a ladder, a steep ladder, which is strange for McDonald's. He's like, I want to buy right now. And I'm like, okay. But you would have made $6,000. I said to him, you would have made $6,000 if you would have bought McDonald's.
12K. Yeah.
For 12,000, it would be worth 18,000 today.
And you would be
cashing
out as fast as you could.
Well, I mean, that's an over 50% move in McDonald's in basically from January 1 until December, 31st. It's crazy.
Yeah.
But so not only is crypto doing this, and people, again, fail to see this, all stocks are doing this. It's all related. And here's why. It's all related, Sarah, because people around the world right now have little faith in their governments. Look what's happening in Venezuela. Look what's happening in Russia. Look what's happening all over in Africa. South Korea, let alone North Korea, right? The Middle East is throwing their princes in jail because they know things that they don't want people to know. I mean, it's scary out there. It's a scary world. So I get why people are attracted to something that in essence skirts many governments that are basically falling upon themselves, right? It makes it like that fundamentally makes sense. And fundamentally it's here to stay. So like people, and I think people will wake up to that. And I think maybe 2% of the world's population even can talk about it like we're talking about it. I'm not even, so there's so much, it's going to continue and it's going to grow and grow. And I think how it ends, I can't tell you. And I can't tell you, who ends, what it, I can tell you that probably the cryptos we have today won't be the ones left standing in a year, 2 years. And that's always the way it works, right? There'll be innovations, there'll be more security, there'll be whatever it is that makes this one better than that one.
Right. And actually that's what most people I know even that are hard trading right now in crypto are saying, like, maybe the next 2 years, like maybe it's like this, maybe not even 2 years, maybe 1 year,
right.
Like this isn't by no means what's happening right now. Is this going to be forever? But I think it's interesting because one of the things you touched on is like, people forget that there's also this more traditional sort of investing trading space. And I think what's really funny about it is that, I think people are confused by crypto and confused how to get it. How do I do it? What do I do? And I think they're also confused by that in the world of just regular trading. And you and I talked a little bit about that. I think for everyone, it feels like how you talked about how you first got into it, having to have a broker and having to call and you have like margins and all these things. And I think, really now we're in this cool time where people, their assets, they can trade them themselves and they can be involved in making those decisions themselves.
Correct.
And that's where we're going to come in.
This is absolutely an exciting time because this is the time where, and it's only like I felt this in the, early 90s and it's just progressed and progressed and progressed. Like I used to think about, okay, who am I going to call if I can't put the order in? Now I can put it in on my phone. I can put it in my, my iBook, my MacBook Pro, my Windows machine, my Linux machine. I can put an order in anywhere. I can put it on, I don't even need an app anymore. I can put it on a browser. So there's so many ways to do it electronically now and do that it's fantastic. And then the other thing is we all, are good at something. Like our personality matches some way. And trading, by the way, is also, in my mind, the same as investing. Just depends on, you're just trying to do different time frames. Then your buy and hold might be 3 years and mine might be 3 minutes.
10 minutes.
Now,
yeah.
right. And with leverage, I might have and that's what all these, these computers were trying to do, that were putting their computers close to the node so they could trade bigger and in really tight time frames. But ultimately, we all have the time that we have, and we can all be better. And if more people are aware of technical, fundamental, and behavioral, then we will have more efficient markets. We will have more centralized players, and we will have more interest, i.e. transparency and liquidity. So I have no doubt that those things will come over time and faster than any of us think. And how they come out, I think like you said, it's an exciting time to talk about this because this stuff is changing. You know, it's just like the memes. That's why memes are so like boom.
Yeah.
You know, they're true.
And there's all these crypto memes, so we know we're taking over this internet. Get out of here, Kim and Kanye. We're trying to take over this.
Right.
And I want you guys to know that
it's true.
That Matt and I are we've been working on a project. It's had some bumps. It's been, we had Christmas, we had all kinds of stuff going on, but Matt and I are planning on working on a project where he's going to teach me some of these fundamentals of trading. We're going to go through some basics. We're going to try to give me that foundation that I need so that I can go out into this world and be an investor, and so that you can too. So you guys will want to look out for that. But for now, I'm going to let you go, Matt, but it was so awesome. And let's just, again, tell everybody where they can find you.
Thanks, Sarah. They can find me at MISS Trade, Miss Trade, and they can find me on Twitter also at 1 Minute Trader. And if you go to 1minutetrader.tv, you'll find all of our info on our educational programs, and we'd love to hear from you. Drop us a note. I always encourage people, book a calendar, 30-minute call with me. If you think you have something you want to ask me, work with me, drop us a line. And I appreciate that, Sarah. Thank you.
And it was so fun. You guys can, of course, find my interview with Matt, where I basically just fall in love with the idea of trading. Well, thank you so much. We'll keep you guys.
By the way, women out there, pay attention because women are more pragmatic. They're smarter than you dumb, ego-driven boys, and we're all boys. So women, please perk up. You guys know more about this than you think, and you have more gut and instinct than I think men do. And I think you're less ego driven. So this is a great business for anybody. I really mean that.
I keep telling my husband that.
Mm-hmm.
So.